Hello everyone, and welcome back to the Mortgage Rundown. Today we're going to talk about the FOMC. On November 1st, the FOMC met and decided to leave interest rates unchanged. The Fed did forecast that they expect to raise rates in December. The market is pricing in a 90% chance of a Fed increase next month. In addition to the FOMC meeting was the announcement that Janet Yellen will be replaced as Fed chair. Jerome Powell was nominated as her replacement, but keep in mind that confirmations could take a month. Does the Fed move interest rates at their meeting on December 13th if Janet Yellen is still at the helm? Is it possible that they still raise interest rates while the Fed chair is in the process of being replaced? Also, if Powell is confirmed before December 13th, does he raise rates at his first meeting? These are all important questions that must be considered over the next 30 days. Now, in terms of the Fed possibly raising rates in December, how has that affected the yield curve? Will longer-term rates such as mortgages move higher? Take a look at the following graph, which shows the spread between the 2-year and 10-year Treasury, often referred to as the shape of the yield curve. As you can see, over the last 8+ years, the spread has gone down and down, which means the yield curve is flattening. Essentially, it means you can borrow money for longer periods of time, and the cost for borrowing that longer period is coming down. In the mortgage universe, for example, the incentive to get a 30-year fixed loan versus an adjustable rate is more attractive now than it has ever been in the last 8 years. What the yield curve also tells us is that the expectation that rates will keep rising is diminishing. While the market may expect the Fed to raise rates in December, the market also believes there aren't a lot of rate increases next year and beyond. In fact, the market is only pricing in a 50% chance that the Fed raises rates twice next year. In the coming weeks, you should keep an eye on the following items. Inflation figures such as CPI and PCE, which are the most watched figures by the Fed. The nomination of Jerome Powell and replacement of Janet Yellen could shift the direction of the Fed. And lastly, keep an eye on the stock market. Will investors reduce or increase stock positions near the end of the year as they plan their investment strategies for 2018? If you'd like a more in-depth analysis, please visit our blog. Thanks for watching and have a great day.